A very good afternoon to everyone. I'm Pooja from Singapore Indian Chamber of Commerce and Industry. It is my utmost pleasure to be here with all of you today. The Singapore Indian Chamber of Commerce and Industry has served the needs of local businesses to grow and thrive since 1924. We give our members a competitive edge in the global market by providing them with diverse insights and strategies for internationalization in overseas markets. Today's workshop is focused on the impact of GST Amendment Act 2020. How will it affect a registered trader? What shall be your key consideration? We have with us today Mr. Manmohan Singh, Director as well as Trainer, GST Academy and Accredited Tax Advisor, Singapore Chartered Tax Professionals, who shall share his expert insights on this topic. Without further ado, I would like to invite Dr. Zawar Ali, Managing Partner of Raffles CAs LLP and member of SICI's Board of Directors, to open today's event. Dr. Zawar Ali, a chartered accountant with over 50 years of external, internal audit and management consulting experiences globally, is currently the managing partner of Raffles CAs LLP Singapore. Working through the rank and file, starting his initial career with Chush Ross and Company, Dr. Ali obtained Masters in Accountancy from Monash University, Australia, and is a member of various professional bodies worldwide. He has represented Singapore on strategic management issues, Asian Productivity Organization, Japan, as a speaker and had presented various papers in forums, conferences on varied topics. Dr. Zawar Ali, please.
Thank you, Pooja, for that wonderful introduction. Very good afternoon to all of you present today in today's session. Today, our special guest speaker. Why I say special? Because he is going to save you a lot of money, free from penalties and things like that. So he is a dynamic man we have on board today to address the session today. Over the last 5 financial years, the IRS has collected almost 1 billion, not million, 1 billion from GST registered traders due to errors, excluding investigation cases. Of course, with the investigation cases, it amounts to larger amount. This is a significant amount and proves that GST not a simple tax. The changes in GST attempts to improve GST administration and enhance the controller's powers to safeguard public monies, investigate tax offenses, and counter GST fraud. Mr. Manmohan Singh, a director as well as a trainer at the GST Academy and accredited tax advisor, GST, and is a Singapore chartered tax professional. A very warm welcome to all of you. Thank you for joining us today's session on GST workshop. On 20th July 2020, the Ministry of Finance, MOF, conducted a public consultation on the draft Goods and Services Tax Amendment Bill 2020. Today's workshop and this session will go in depth into how this bill specifically impacts SMEs, our small and medium enterprises. This bill will be supporting SMEs compliance with due diligence requirements. The amendments to Section 20 requires businesses to undertake due diligence checks to avoid being involved in a fraud that they should have known. The main issue here is that whether you are a big or small business, it has got different resources and capacity to conduct these checks. What documentation is required from SMEs is to maintain part of their due diligence checks. What is the controller's review process when investigating these fraudulent transactions? The key considerations will be useful in guiding honest, legitimate businesses in their due diligence checks in order not to get caught for fraud. This is where Mr. Singh would run through these pitfalls to watch out for. Our champion speaker for today is one of the pioneers of us overseeing and executing the GST system at IRS in 1994. He acquired enormous expertise in GST regulations, complex GST issues, and was involved in drafting rulings on the GST application. Today in this session, Mr. Singh will be sharing with us in-depth presentation on the GST Amendment Act and also will be giving us a summary of the latest changes made within the Act that need to be aware of. He will cover the specific rules pertaining to the input tax claims, the impact on SMEs, the IRS e-tax guidance on this amendment. I encourage all of you to maintain this e-guide as a reference in order to make sure you don't fall out. I believe that his insights would be very helpful for all businesses and SMEs present in this session. Without much further ado, let me invite Mr. Manmohan Singh to share with us the impacts of GST Amendment Act 2020 on SMEs. Mr. Manmohan Singh, please. Thank you, sir. Over to you, Mr. Manmohan Singh.
Okay, thank you, Dr. Ali, and thank you to all the participants. I've got a good number of participants. Thank you for spending your afternoon today with me. And I also like to thank the Singapore Indian Chamber of Commerce for putting in place this opportunity for me to share my experience and knowledge with all of you. The GST Amendment Act 2020, if you read the Act, it will be quite complex for you to understand. So what I have done is I've extracted the key elements which are in the presentation slide, go through the amendments, and explain to you what is the impact for businesses. The main impact, if I can summarize it before I commence, is that previously most businesses, once they are registered, they are effectively the collecting agent for the government. Okay, you collect tax on behalf of the government and you account it either quarterly or monthly. What this change does is that it has given you an added responsibility. Besides collecting the tax, you now have an additional responsibility of checking on your suppliers. So the old business, the old methods of doing business where you meet a supplier at a seminar or you meet him through a website and you immediately go into buying goods and selling, is no longer applicable. You can still do it, but you are putting yourself at a very high risk and will go through the penalties. So what you have to do, you have to, as Dr. Ali has explained earlier, you have to do the due diligence checks. Okay. Before I start, I'd like to go through one very important point. And the reason I'm doing this is because I recently got a client who was audited by IRS for the PIC claims. So slight diversion on the PIC claims, but the same principle applies for income tax or GST. What this client did was he engaged a tax agent, so-called tax agent. And the second mistake the client did was they logged on to the laptop and gave the laptop to the agent to key in to submit the claims. What happened was when IRS started doing queries, the agent stopped answering phone calls. So what I'm trying to put here is that when you select a tax agent, you must make sure that he is accredited. He's accredited with the Singapore Institute of Tax Professionals. Because I know personally many tax agents are not, but they claim to be tax agent. So it's very important that you do that because my client is now facing penalties of up to 40,000. Because from IRS perspective, my client is the one who logged in, used the SingPass, and submitted the claim. So once you do that, it's very difficult to say that, oh, it's done by another tax agent. Okay, so a very important point to remember. Okay, just give me a second. I'll share the screen with you for the slides. Okay, so today's seminar is the impact on SMEs as a result of the GST Amendment Act 2020. The name is 2020, but it comes into effect 1st January 2021. That's the effective date. Basically, our journey for today will go through an overview of GST and the penalties, some very important key features of GST, which you might be familiar, but it's good to just quickly run through so that we are all on the same page. Summary of the latest changes to the GST Act, some important points you need to be aware of. The two main changes besides the GST Amendment Act is there's a change in the imported services, okay, the GST on imported services and doing business online. Some brief updates on these two new changes. Then I'll summarize the issue on the GST rules prior to January 2021 and the changes after from January 2021. Okay. And what is the impact on SMEs? Why I focus on SMEs is that because the bigger MNCs, most of them would have in place even before this Amendment Act, due diligence processes, audit processes, most would be in place. But many SMEs tend to ignore this due diligence process. So I will focus on that area. And what is the IRAS e-tax guidance on this amendment? They have published a guide, which I will go through briefly. What is the IRAS guidance on this amendment? And from my experience, I'll share with you some tips on what you can do to comply with this amendment, other than what IRAS has given in the guide. And then feel free, we'll have enough time to answer as many questions as possible. Okay, just a quick update. Based on IRAS and ACRA data, there are 100,000 GST registered businesses. But for business paying corporate tax, there are 500,000. Why I'm highlighting this, I'll put it in perspective so that in the next slide, when I show you the chart that GST has, IRAS auditors can collect much more in penalties for GST compared to income tax. So if you look at the figures from 2008 to 2019-20, the average over the last few years, GST penalties exceed 150 million. And I'd like to emphasize these GST penalties are not those fraud cases. Fraud cases are under investigation and they are classified separately. These are penalties arising out of GST audit, when the auditors do a random audit. Either they can either do a random audit or they do based on an industry basis. Say a few years ago, they audited hawkers and food suppliers. And due to various, it could be error, it could be system error. I've come across areas where system error, the GST computed is lesser, or it could be many other reasons. That's a topic for another seminar. But just to highlight that the amount of penalties collected from GST errors is much higher than that of corporate tax. And this is significant for those in the trading business. If you buy and sell, your profit margin can be 3%, some as low as 2% because you go for volume. You go for volume and you have 2% and you get penalized for the transaction and you have to account 7%, it will wipe out all the profits for that year. Okay, I'm sure you all are very familiar, but just to go through the two keywords in GST, you have the output tax. Output tax is collected, what is collected from your customers. Input tax is what you pay to your suppliers. Okay, back to the concept of output tax is what is collected from your customers, and input tax is what you pay to suppliers and Singapore Customs. Okay, before 2021, the input tax is actually an entitlement. There's a section 19 and 20 which entitles you to offset the input tax based on the principle that you have purchased goods for your trading business or for using as a business asset, and you have paid the supplier. But from this year onwards, the word entitled is no longer applicable, because we'll go through in the future, the next few slides, what you have to do in order to make the input tax claim. Okay, next slide. Just to make sure we understand the four key concepts in GST, refresher, out of scope. Out of scope supply is a non-taxable supply. It's where you purchase goods, say from China, and you export it to Saudi Arabia. Okay, the goods do not come into Singapore. Exempt supply is when you have trading in US dollars, and end of the year you convert your P&L into Sing dollars, there is an exchange rate gain or loss. So there is an exempt supply. Or interest earned, you earn interest income from giving loans, that is also an exempt supply. So these are non-taxable supplies. Taxable supplies are your 7% GST which you charge, which is called a standard rate supply, and your zero rate supply. Zero rate supplies are when you export goods. Okay, when you export goods, that are classified as zero rate. So basically, there are two types of supplies, taxable and non-taxable. Okay, next slide, please. Okay, with the amendment, the burden of ensuring that a supply account GST to the contract is shifted to you as a GST registered trader. What does this mean? If, for example, your supplier collects the GST, you pay him the GST, he collects the GST from you, and say within 3 months or 6 months, he disappears. He does not file the GST return, and the controller is not able to contact him. Then this new amendment will shift the responsibility to you. Okay? There are certain things which you need to do to convince the controller that you are not involved. But if you're not able to convince the controller, then the tax becomes due and payable by you. So that's a very big change to the GST rules. And we'll go into more details in the later part of this presentation. Okay, next slide, please. Okay, so as a GST trader, what will be your key consideration as far as this new amendment is concerned? As far as this new amendment, I'll put it in one word: documentation. Every action that you do, it must be documented. Even WhatsApp communication. I think you have read the Sunday Times. There was an article which said that the High Court actually recognized WhatsApp communication. So it's very important that any form of communication, especially through the phone, is backed up. You must back up, maintain it for at least 5 years. Okay, because if you lose that communication, one good example is purchase order. I have clients who actually no longer issue purchase order. They just WhatsApp their requirements and the goods are delivered to them. So those WhatsApp communication are very important and you have to maintain it as part of your documentation. Next slide, please. Another important point which I'd like to share with you, although this is not in the Act or it is not in the GST e-tax guide, I would suggest that you also take photographs of the goods which you receive, or if you do repacking, and keep a record of the date and time. And also have a security CCTV and do backup, because this CCTV normally the recording is replaced every 30 days. So do keep a backup. I'm sharing this is because of actual experience. When the auditor asks for all the various documents and they have been supplied, the auditor go one step further to request for photographs and even CCTV footage. So although it's not stated in the e-tax guide, this is my recommendation to you. Next slide, please. Okay, let's go through the two changes to the GST Act. Not to do with our topic today, but just to keep you updated. A reverse charge. This reverse charge was in the Act since 1994. The only difference is that there was no effective date. So from this year, from 2020, there is this concept called a reverse charge. But if you are a taxable trader and you are allowed to claim the input tax in full, there is not much impact on you. It will only impact those who are partially exempt. Partially exempt meaning that traders who make taxable supplies and exempt supplies. Earlier on, I went through what is exempt supplies. So if you earn interest income, that's part of your major source of income, or you receive government grants like charities and voluntary organizations. These organizations can only claim a portion of the input tax. So they will be impacted by this reverse charge. But for you, for your information, if you do not make exempt supplies, it is just for your information, it will have no impact on you in your GST filing. Next, please. Okay. Now, partly due to COVID, the way businesses are run has drastically changed, and there's a lot of online transactions. So from 2020 onwards, if a foreign person, a foreign entity, does not have a business establishment in Singapore, but they are conducting business either through their own website or to any of the other channels, online channels, they will be required to register for GST. But the threshold of the local supplies is 100,000. So if it exceeds 100,000 for sales in Singapore, and overall, including overseas, exceeds 1 million, then they are required to be GST registered. Okay. This probably just for information because it won't have a direct impact on you. For doing business online, the key criteria is the delivery. Okay, so for you, you can also be doing business online. Okay, now putting aside the overseas vendor registration, as a trader, you can have a physical location or you can have an online location and you can deliver goods. So when you deliver goods through online purchases, how do you determine whether GST is chargeable or not? So very important in your website, when the customer makes the purchase, you must get details like his name and his address. Okay, the delivery location of his address will determine whether GST is chargeable at 7%. If the location is outside Singapore and you deliver the goods, so the normal rules apply, you have to keep your export documentation, okay, the courier documents to prove that you send the goods overseas. So for doing business online, the key criteria to remember is where are the goods delivered. Okay, next slide, please. So for services, online services are slightly different from goods. For services, it can only be zero rated if it's supplied under a contract. A contract, and the beneficiary must be a person who belongs outside Singapore and who is outside Singapore at the time when the services are performed. So here the Act uses the word contract, and I would like to share some experience in this area. At times, you can have a verbal contract, okay, a verbal contract to provide services, but we always recommend that if you have a verbal contract, please draft a simple written contract and get it signed by both parties. Because once you're audited, the controller always asks for documentation. And you cannot show documentation that your contract is with an overseas person, then it'll be very difficult to convince the auditor. Why you zero rated? Why did you zero rate? Because you would not have any shipping documents or airway bills to prove that the goods are sent outside Singapore. And although the services are provided outside Singapore, it must not be connected to any land or goods in Singapore. Okay, next slide. Okay, prior to January 2021, a GST registered person is entitled to input tax claims for GST incurred on the expenses. Except for those disallowed, there are a few disallowed: your motor car expenses, petrol, medical expenses for staff. All these are not claimable. General purchases of goods or services, input tax is claimable. Basically, you have to show to the controller that you have a tax invoice to prove that you purchased the goods from a GST registered supplier. Okay, here again, I would like to divert and go into your internal procedures. Okay, when you purchase from a GST registered person, especially if it's a new supplier, you must include in your current process to go online and check on IRA's website whether this trader is registered for GST. Keep an Excel sheet of all your suppliers, or if your system you can input into your system the GST registered trader's name, GST registered number, and the date he was GST registered. And why I say this is important? Because there have been cases whereby a trader submits an application to IRAS. It is either not approved or it is delayed, but in his system, he has already input the GST, and when he issues invoices, GST is charged. So there have been such cases, and you get into audit issues. So always put in place a procedure to check your supplier whether they are GST registered. Okay, the next condition was it must be incurred in the course of furtherance of a business. It must be used for making taxable supplies. So you cannot use the services or goods to make exempt supplies. And they are not specifically disallowed, as I've explained earlier. Okay, next slide, please. Okay, a GST registered trader must possess a valid tax invoice issued by the supplier. Okay, here I'd like to emphasize again that the tax invoice is a very important document, because I have a few audit cases whereby the buyer or my client, the staff did not ensure that they receive a valid tax invoice because the supplier just issued a receipt. So if your value is low, 300 to 500 or below 1,000, not an issue. But once it's above 1,000, you must have a tax invoice. Okay? And if the tax invoice is in foreign currency, the exchange rate and the Sing dollar equivalent must be indicated. Otherwise, your input tax claim can be disallowed. Okay. So what is the significant change as a result of these amendments to the GST Act? These changes are comprehensive and significant. And I've tried to attempt to summarize it, but when you go back, you can download this e-text guide, which has all the details of these changes. Okay, it's quite a comprehensive guide with 20 over pages. And discuss with your team, your finance team, how you're going to implement these new requirements. Okay, these new requirements. Okay, next slide, please. Okay, I'll go through a few sections which I would say has a very significant impact. Okay, so I'm highlighting those. Section 20A of the GST Act effectively overrides Section 19 and 20, which I mentioned earlier. Under the previous rules, you satisfy Section 19 and 20, you can claim the input tax. But now this 22A says that even though you satisfy Section 19 and 20, this section can deny you the input tax claim. And the words used in the Act is that if you knew or should have known was part of a fraudulent arrangement. So this is very significant, because if you knew, then there's no argument, you can be said to be part of it. But they use the word should have known, and there's no definition given, should have known. How do you prove that you should not, or you did not know about it? Very difficult. There's no documentation you can show. It's between what you explain to the auditor and whether the auditor trusts what you have presented to him. So it is still untested. Future audit cases, if you are audited under this section, it will be very, very tough for you to prove that you did not know about this arrangement. Okay, amendment to Section 20 creates a new requirement for traders to take reasonable steps to ascertain whether the supply was part of such arrangement. Okay, the arrangement refers to the missing trader supply chain. It is missing trader supply chain. I'm sure you have read quite a bit of it in the papers. And you can also check out the definition which IRAS has put up in the website. And IRAS has also issued a press release explaining this missing trader scheme. I'd just like to share with you that the illustration which IRAS gave, there are some errors in it. And I actually wrote to the Straits Times to point out the errors, but unfortunately, the Straits Times did not correct those errors. Okay. And just to give you an update, this missing trader scheme, it was started sometime in 2016. It was only for 1 to 2 quarter period in 2016. And IRAS has been auditing, and up to today, and the industry was the handphone industry, basically electronic. Those buying and selling handphones, chips, all the small electronic parts. And up to today, IRAS has not concluded. I have a few clients who have been audited. They have been a genuine business. They have been in this business for more than 10 years. They are local Singaporeans. But because of this new section, they are still under audit. Okay, because from auditor's perspective, they did not take reasonable steps to identify such an arrangement. So this is a huge burden from my point of view, because the trader might be a genuine trader. They have been dealing with him for 5 years. Suddenly he decides to retire. He says, okay, I don't want this, I will sell all my business to a third party. A new directors come in. And these new directors are the one who has this plan to do this fraudulent scheme. So I've been dealing with this company for 5 years, the manager is still there, and I'm still dealing with him, how would I know that there's a change in directors? So are you required to do an ACRA profile every now and then to make sure that the directors are still the same? I'm not sure this is a huge burden on the part of a GST registered trader. Okay, next slide, please. The term reasonable steps is not defined or elaborated in the GST Act. So this ambiguity, just to sidetrack a bit, the term documents, Section 46 of the Act actually specify what are the documents you need to maintain. Okay, like for supplies, your suppliers' invoices, your purchases is stated in broad terms. But here the word reasonable steps is neither defined nor elaborated. Okay, so it's very onerous requirement for traders, especially SMEs. So basically what your job now, besides collecting GST on behalf of the government, is that you have to conduct a risk analysis on behalf of the controller. So my question, I'm just posing a rhetorical question. When a company is registered for GST, IRAS actually does a very thorough check, whether they have paid their property tax, their income tax on time, whether the directors have defaulted on any other of their personal taxes before they are GST registered. And there have been cases whereby directors who have been defaulting on their income tax, IRAS has refused to register them for GST. If their turnover is below 1 million, if above 1 million, then they have no option. So if IRAS has done the due diligence checks, register them for GST, and you as a trader, you deal with these traders, and they do a fraudulent act. So is the trader responsible? Because traders rely on IRAS doing the due diligence checks. Okay, next slide, please. Next slide, please. Okay, slide 21, please. Okay, so basically we have apologies for that slight technical breakdown. Okay, basically that's a summary of the obligations under the new Amendment Act. There are actually a few more, but I summarize the key points that you need to take note of. Okay. Okay, next slide. Here is our recommendation. Okay, there's only so much an SME can do. So as I mentioned earlier, the key is to maintain documents. My suggestion is for each new supplier, you create a file, like a business profile, create a file for each new supplier. And then we'll go through some pointers, and you can also adapt some of the pointers from the IRAS e-tax guide to include like a checklist, what you need to check before you engage with a new supplier. So it is something like a job interview. Before you are given a job, the employer must be sure that you are capable of doing the job. You are a trustworthy person. So similarly, now IRAS requires you to do the same thing and interview your new suppliers. Okay, earlier on I mentioned that you can actually check whether a GST trader is registered on IRAS website. And IRAS actually does a detailed check before they register. But this data is insufficient. It's unlike ACRA. ACRA, they will put on their website whether a company is delinquent in their annual filing or are they up to date. So if they're up to date and they're filing on time, then you know that they are complying with ACRA. But IRAS does not put this data. So probably if you are GST registered, you can write to IRAS and say, please put up some data on your website, whether this trader is paying his GST on time. Because if you know that he's not paying on time, you definitely do not want to deal with him, because then you become responsible. And I don't know, maybe you can suggest to SICI to write on behalf of members to include this data on their IRAS website. Okay, next slide, please. Okay. Back to the list slide. Okay, what options do SMEs have? Okay, you have to ask yourself this question. If you're in the trading business, okay, I would like to put it in perspective. If you are in the retail industry, the risk is lower. Okay, although it can happen, but the risk is much lower because you are supplying directly to the final consumer. But if you are in the B2B, especially in the trading business, you buy and you sell, then the risk goes up exponentially. Okay, so you have to ask yourself, is trading business, which has been the backbone of Singapore's progress since the 1960s, since independence, is it still a viable business based on a profit margin? The few traders I have who have been audited, they were earning up to 3%, but their refunds, which has been frozen for the past 5 years, is 7%. So effectively, they have made a loss for that whole year. And up to now, they still have not got their refund. Okay, so if you are in the trading business, you have to ask yourself this question. Personally, I would say it's not worth the risk. And I've recommended to a few clients, they're still in the trading business, but they have shifted, either use Hong Kong, which is there's no GST, or Dubai to do the storage and delivery of goods. So it becomes out of scope. If they bring it to Singapore, they store it in the free trade zone at the airport, where they do unpacking and repacking and export it out. So that is also out of scope. Okay, so you don't get into this issue of claiming. The tricky part is once you make a claim of input tax, that's where you have a lot of issues. Next slide, please. Okay, the GST guide on due diligence checks to avoid being involved in the missing trader fraud. Okay, I've summarized some few points from the e-tax guide to explain further what is required. Okay, so this guide states that from January this year, you will not be entitled to any input tax on purchases which you knew or should have known to be part of an arrangement to cause loss of public revenue. Okay, they refer to this as the knowledge principle. So now you have to be familiar with this new concept called knowledge principle. And they've gone into extensive detail explaining this. But my question here is back to the slide again. One more slide. Okay. The question here is that, again, the same phrase, should have known. Okay. Of course, if you knew, there's no excuse, but you should have known. Okay, that is a very vague phrase. How it is going to be tested, should. case can only be tested if after audit, the case goes to the GST Board of Review or goes to the High Court. Then there will be from the legal perspective, a definition and guidance of what constitutes should have known. But from the perspective of the trader and the auditor, this will be a very, very tedious process to explain. Okay, next slide, please. Okay, they have explained that under this arrangement, the missing trader fraud, they call it MTF. The e-tax guide has explained that the seller at the beginning of a supply chain, which he later goes missing and fails to account or pay the GST output tax charge on goods sold to intermediary businesses, referred to as buffers. Okay, the goods will ultimately be exported by the last supplier. So most of those who have been caught in the chain are these exporters. These exporters, they made a purchase, and when the export is rated. But because down the chain, one of them is a missing trader. And because of this one person, all those under the downline become responsible because of the term known or should have known. So the goods will ultimately be exported by the last supplier in the supply chain to an overseas customer with no GST charge as the supply is zero rated. The exporter then claims from IRAS the GST, the input tax which he paid on the purchases of the goods from the buffers. Okay, just to share with you a case which we are handling, we and my partner are handling. Our client is the one who exported the goods. Okay, he exported the goods and he made a purchase from a local supplier. The auditors have been asking for documentation for 4 years. On and off, they keep on asking documents. The refund is more than 1 million. So once they have exhausted, they have shown every single document that the controller is asking. The controller then changed focus and said that these purchases you made from the buffers, there is no supply. Okay, they use the word there is no supply. Without showing any evidence, the auditor said that because of that, we are not going to refund you because we are of the view that there is no supply between the supplier or the buffer to you. So because there's no supply, because they couldn't find any issue with the documentation for the export, it's all in order. Every bill, payment evidence, everything was in order. So they couldn't find that. Now they are finding issue on the purchase side. They said there is no supply. Trader is a genuine trader. So this case is now with the GST Board of Review. One of the first cases to be heard on the GST Board of Review in sometime in November. So what the judges decide will be very key, will be a key factor. Okay, so just to share with you a case I had. So what the guy says that is due to the failure of the missing trader in accounting for or paying the output tax, IRAS will suffer a loss if it pays the exporter the input tax. So you can see from the phrasing is that the whole burden of the missing trader who did not account for the tax has been shifted to the buyer who suggests the registered trader. Personally, to me, this is very unfair because there are many other ways that this issue could have been resolved. And just to share with you, for those who are familiar with the GST system in India. So in India, they have a very simple system whereby when you file a return, you have to give a listing of all your sales and all your purchases. So same thing with the seller, same thing with the buyer. So what they will do is that their system will auto match and ensure that whatever you purchase, the supplier has paid. It is only when the supplier has paid to the government, then the refund is released. So it's 100% foolproof. It's 100% foolproof. Although the refund you might get it later because of the matching system, but it's a foolproof way to ensure that the suppliers pay the tax before it is refunded. Unfortunately, the burden here is shifted to the SME. Next slide, please. So from this year, you will not be entitled, the guide clearly makes it that you will not be entitled to any input tax on any purchase which we knew or should have known to be part of an arrangement to cause loss of public revenue. Okay. How can you find out about such an arrangement? The guide does not give you any clear guidelines. It just shows you the processes which can you put in place. So now it is very important that you go back, discuss with your team to put the processes in place so that you can convince the auditor that you have done your due diligence. Okay, now the issue here, once you get an audit, your main objective is to show to the auditor that you have done your due diligence and you have sufficient documentation. Okay. Show that you have done due diligence and maintain documentation. So these processes all must be put in place once you get back to your office. So in other words, you as a registered trader are effectively the enforcement agent for IRAS. So I would like to put it as outsourced. So they have outsourced this responsibility to GST registered trader to identify and sieve out fraudsters who are out to cause loss of public revenue. How you can do it, I think at the best you can put in is your due diligence. But to me, fraudsters are getting more and more intelligent. They're finding more new ways how to cheat on the government. So your objective is to try and identify, find that it's a newly set up business. Okay, another point I would like to make is you must take up the ACRA profile of a business. You can check whether it's a newly set up business. Okay, 1 year, 2 years. If it's a new, then probably you should start with making very low amount purchases. So your risk is minimized. So even though if IRAS were to disallow, the figure will not go into billions. Okay. Next slide, please. So the guide recommends that you adopt a 3-step approach to identify these fraudsters. Identify and assess risk indicators. Perform due diligence checks and respond to the risks and results of the checks. So they have given some guidelines in the e-tax guide, which I won't go through. But basically, these are the 3 areas you would have to implement in your daily business processes. Okay. Okay, next slide. Okay, I've summarized some key points here from the guide. What it says that you have to check the source and authenticity of the goods. Okay, brand, manufacturer, country of origin. Okay, check whether it's authentic goods. Again, I share with you an actual case that by this customer of mine, they purchased iPhones Okay, they purchase iPhones. They're dealing with second-hand iPhones. And you'll be surprised, the second-hand iPhone market is very big in China. Okay, it's very big. So he purchased, the input tax claim was 500,000. Okay, 500,000. So when IRAS audited, at the same time, even the police got involved because the police seized all the handphones. Because one of the part was a not original Apple part. So the supplier who was selling him the goods, they actually used a different make or third-party parts to put inside a second-hand iPhone. So because of that, there was some copyright issue. And at the same time, they got their refund withheld. So it's a double blow. On the one hand, they don't get their refund. On the second one, they cannot even sell the phones. And when subsequently the phone were released about almost 2 years later, phones are worthless. You can't sell it even probably maybe 5 to 10% of the original cost. So this issue of how you're going to check authenticity, it will be very difficult. It will be very difficult to check. Unless you are able to, unless you buy directly from Apple. So unless you buy goods directly from Samsung or Apple, then you can be sure that it's authentic. But once you go to third party, then it will be very difficult for you to make sure it's authentic goods. Next, you are required to check the supplier's customers' relevant experience in the trade and its knowledge of the product. Again, this is to me, is how are you going to check the customer's relevant experience? It's not a job application whereby you indicate, you can give your testimonial of your past job experience. Okay, I work in IRAS, I work in CID, or I worked in Apple. They will give you a testimonial. Suppliers, will they give you a testimonial? Probably you can check their website. Some of them in the website, they'll put their history or their background. So then probably if they have a website, you can check. But how would you know whether they have knowledge of the product? Probably one suggestion I can give you is knowledge of the product is that you have to meet up with clients. Even under this current environment where there's partial lockdown, you have to meet up with clients. And let's say I'm dealing with iPhones. So dealing with iPhones for years, I will be very sure of all the details, intricacies of the product. So if I'm buying an iPhone from this new supplier, I can test him and ask him certain questions about iPhone. So depending on how he answers, I can be familiar. He's not familiar with the product. So back to this missing trader scheme. One of the key, I would say the ingredients was that these people involved, they wanted to make money. And they wanted to make fast and easy money. So I made one of this in the missing trader fraud who were audited by IRAS. And I asked him a few questions. And from there, I knew that he did not have knowledge of the product. Because he was dealing with some other goods, then all of a sudden he heard in the market that you can make money because iPhone was very hot selling product at one time, especially in the earlier stages in 2016. So he knew he can make money, so he bought and then he sell. So to him, he doesn't know much about iPhones. So if you have good knowledge of your product, that is one way you can test, satisfy that he has knowledge. And again, my suggestion, if you meet up with new suppliers and you have done the relevant experience check, put it in writing. Okay, I've done A, B, C, D, E, and these are my findings. Okay, so this will be very useful if you are audited. Because remember the term should have known. Okay, so this is one way you can show that I've done my due diligence. There is no reason for me to suspect that he's doing something fraudulent. Because this is the angle you must adopt should you be audited. Just to sidetrack a bit, as I mentioned, there are about 100,000 traders in Singapore. If you look at IRA's annual report, they audit an average of 4,000 GST traders a year. 4,000. So it might take a long time, you might not even be audited in the next 10, 20 years. But what happens is that IRAS goes by an industry basis. As I mentioned, the missing trader fraud was in the handphone, those dealing in the handphone industry. Because one person was identified, the whole industry, because from ACRA business profile, they will know who are in this industry. Because of one trader, the whole industry was audited. So you might be. So now you can consider yourself GST, you are like in a family. One member commits something illegal, the whole industry is audited. So the issue is not so much you get penalized, because if you are genuine, you are not penalized. But the whole audit process can be very, very, one is time consuming. You ask for, every few months, you ask for some new documents. It can be very stressful for the staff and also for the business owner. And I have clients who have started suffering sleepless nights, having headaches. Okay. So this is just to share with you some experience. So that's probably one way you can test the knowledge, whether the customer has knowledge in the product he's dealing with. Third suggestion from IRAS e-tax guide is to obtain credit checks or other background checks from independent third party. Okay. So I know there are some independent third parties, for a fee, they will do a credit check for you. So probably you will have to engage them as part of your process when you get a new supplier. Of course, once you have an ongoing supplier, then you have built up a relationship, that's fine. But this is very important for new suppliers. Visit your suppliers or customers' premises. Okay, I've also mentioned that earlier. Visit is not only to have a eye view of what they are doing, but also to discuss and find out what's their experience, what knowledge do they have of the product, and again document that you have visited the premises, and ask permission. Can I take some photographs? Put those photographs as part of your records. Okay. So now electronically you need to maintain your photographs, your WhatsApp messages, and your backup your security cameras. Okay, next slide, please. The fifth point which I picked up is that the guide suggests that you consider whether it is realistic for a relatively new business to be able to sell the goods at the rates proposed. It is again an auditor asked one of my clients. The pricing, it depends on a lot of factors. Okay, demand and supply, whether there are few suppliers or there are many suppliers. So for IRAS to say that, consider whether it is realistic. So what this point is saying is, put it in a very nice tone, in a nice way, is that if you have a supplier offering you a cheaper product than other suppliers, or this is the cheapest in the market, so the auditor saying don't buy from them because they said it's not realistic. You cannot be selling it at this price. And there could be many reasons. Maybe he wants to dispose of all these models and he wants to focus on other areas. So what does the auditor wants a trader to do by stating that question whether it's realistic for you to be able to sell at the rates proposed. Okay, my suggestion is that if you have done all the other checks, and this is a genuine offer and a good price, then you should still consider it. After all, ultimately business is to make profits. Or you can be direct and ask the supplier, hey, why are you selling it so cheap? Are there any fake parts inside? I mean, sometimes you can be direct also. And to be quite frank, actually nowadays you have to be very direct. Although business to business, you always have that courtesy, be nice. I think because of all these audit requirements, I think you have no choice. Sometimes you have to be very direct and ask him, what's the reason? And if he's genuine, he will tell you, yeah, I'm going to dispose. I don't want to deal with this product anymore. Then you put it again in part of your fund, supplier's fund, that his intention of selling at this low price is to dispose and to focus on other areas of his business. Okay, 6th point they have mentioned is to find out, maintain the slide. Okay, 6th point is that they want you to find out the reason why there is no necessity to keep inventory or source goods from other suppliers. Okay, this question has been asked to my clients by the auditor many times. You see, the main issue is the cost issue. It's no longer a case whereby you buy goods, stock it in the warehouse, wait for customers to come and buy. That is no longer, unless you know the demand is there. If the demand is there, it's fast moving goods, then probably you keep inventory to supply. But in most cases, especially SMEs, they cannot afford storage or the minimal storage. So they only buy from suppliers. They have suppliers, but they only buy when they have a confirmed customer. So it's back to back. I buy, straight away sell, I ship it out. So they don't have to keep. At the most, what they do is they will repack. When they purchase, they do repacking and they sell. Okay, so if you are buying goods from a supplier who says he has got no inventory, and that it might take a little bit longer time, then probably you can ask him, why don't you keep inventory? It's a valid question. I mean, auditors want you to ask this question. So it's a valid question. Number 7, they say perform credit checks or other background checks. Credit checks, I mentioned there are some bureaus who, for a fee, will check for you, but what do they mean by other background checks? So again, the e-tax guide is using certain words, whereby it's very broad. What background checks do you want me to do? Do you want me to check whether he's married or he's divorced? I don't know what this guide intended when they use other background checks. Number 8, they say check if your supplier customer has the relevant experience in the trade and product. Probably what you can do is you can check when was the company incorporated, how long they have been trading. Besides ACRA business profile, you can also download the accounts, the P&L accounts and balance sheet of the company. So from there, you can do an assessment of how long they've been trading these goods. Okay, next slide, please. Okay, the above is just samples, key points which I found out are not reasonable. When they use the word due diligence, I will use the word that when they crafted this e-tax guide, some of these points are not reasonable. So hopefully, probably when they do a revise, this was the first e-tax guide. Normally, it's within 6 months or what, they will do a revision. Hopefully, more direct what they want you to do. Okay? And also at the same time, as a GST registered trader, you can also write directly to IRS, because at the end of the guide, they say if you have any feedback. So you can also ask the questions. What do you mean by background checks? What specifically do you want me to check? So if a lot of traders write in, then probably they will incorporate that and revise and improve the e-tax guide. It is for your own benefit. So what I did was I picked up a sampling of what is included in the detailed e-tax guide. There's many more details to avoid being involved in the missing trader fraud. Hence, traders in the import-export business should assess the new responsibilities. So I put import-export because this is the highest risk. Other businesses, there's also risk because you are also making purchases, unless you are purely doing services. So I'm not sure if you services you can do a fraud when you're performing services. But these frauds are normally committed where it involves goods. So other businesses you are still buying and selling, the risk is still there. I'm highlighting that if you're doing import-export, that is the highest risk. You are at the top of the chain. You should assess your new responsibilities and the documentary requirements and decide whether the profit margins are commercially viable. So probably some of you who are in import-export business might think of a new business model. Or like one of my clients have done, shift your storage outside Singapore, or do your loading, unpacking in the free trade zone where GST is, there's no input tax to claim. The key here is when you claim input tax, then the issue will arise. Okay, and especially if your profit margin is 3 to 5%, and if the GST auditor disallows your input claim of 7%, not only would it wipe out your profit margin, but it may result in your company not being viable as a going concern. Okay, next slide, please. So I've tried to highlight the amended legislation is skewed against SMEs, especially those in the import-export business. But there are some additional steps that you can take to enhance your compliance level. Okay, there are some additional steps besides what was in the e-tax guide. I've gone through it. We also like to recommend some additional steps that you can take. The next slide. Next slide, please. Pooja, next slide. Okay, thank you. Okay, I've mentioned this earlier. Obtain an ACRA business profile of your new supplier. Okay, if it is a newly established entity, then probably there's a higher risk. Okay, higher risk of this company getting involved in the missing trader fraud. Check ACRA website on the compliance status of the supplier, whether, because ACRA has got a very good feature where it shows the Okay, apologize again for the technical breakdown. So I was saying the IRS website has a good feature whereby it shows the compliance status of the company. So that is one indicator. It's not the only, but one of the indicators. So if it is newly incorporated, you should be aware that the risk is higher. Okay. Visit the supplier's premises to do an on-site assessment. Okay, do an on-site assessment. Whether they are operating a genuine business, you can assess that by probably talking to some of the neighboring companies or companies. If you know of a company in the same industry, we can check with them, say, hey, have you heard of this ABC company? Oh yeah, okay, I know them. Okay. But if you check with a few and say, oh, we have never heard of this, and they are newly incorporated, then you know that the risk factor is higher. Okay, next slide. Okay, I mentioned this, but just as a reminder to check IRAS website whether the business is GST registered and when was it GST registered. Was it recently or has it been registered for several years? If it's newly registered, then probably the risk factor is higher. And if you have a long-term contract with this new supplier, okay, as I mentioned, some of the points in the guide is actually very onerous. And on your part, you will not know whether this new supplier is compliance with IRAS requirements in terms of filing GST returns on time or not paying the output tax due. So actually one of the key indicators is that if the trader does not file return on time. Okay, if a person wants to be a missing trader, he would not file his return on time. Okay, and IRAS, by the time they issue, it's called a rate notice. Within 2 weeks, they'll issue a rate notice telling you a fine of $200 for late filing, and you still don't file, they will send you another reminder, and probably they'll freeze your bank account. So all this happens probably 3 to 4 months, within 3 to 4 months. So there's a time gap. So one of my suggestions, I actually wrote a letter to the forum giving all these suggestions. I had quite a list. One of them is the one I explained about India doing the matching. Second suggestion was that IRAS should actually do quick audits rather than doing a desk audit. The moment a trader does not file return on time, they should immediately raid the office and do an audit, because that is a clear indicator that there's something amiss. Unfortunately, both Business Times and Straits Times chose not to publish my letter. So probably I'll write to IRAS separately, but that's another issue. So if you have a long-term contract with a new supplier, we suggest you write to the controller. Because if you're going to deal with a new supplier, probably you're going to buy goods in the hundreds of thousands or even million. Write to the controller and say, okay, with reference to this new GST Amendment Act, we have done these due diligence checks, A, B, C, D, E, ACRA profile, we visited premises, we interviewed, attach your supplier's profile, which I've suggested, and throw the question to the controller. Say, do you have any information that he's delinquent in his tax payment? Please let us know. So you throw the question to the controller. And of course, they won't reply. From experience, I know they will not reply your letter. But send it by registered letter and keep it as part of the records. So should this trader in future become part of the missing trader fraud, that is a very good evidence to say, I've highlighted to you as an authority, I've done all the checks possible. I've asked you the question, do you have any information that is delinquent in his payment of tax, of late in his filing of GST return? 2 questions. Are they late in filing? Have they been late in filing GST returns and late in making payment? Because if they are late in payment with penalties, then there is also, that's an indicator. But if IRAS did not respond to you, then you can show the auditor, see, I've done my due diligence checks, and I also ask you as an authority, you have all the resources at your disposal to check. Okay, so that would be one of your ACEs. Should you, hopefully none of my participants get audited, but should you ever, then that is one of your strong points. Okay, next slide, please. As I mentioned, the purpose of doing this is that in the unfortunate case that you are audited, you can use this as part of your documentary evidence that you indeed conducted background checks and verified with IRAS before proceeding to commence trading with a new supplier. So the impact that these changes will have is that, unlike prior to 2021, a new supplier, you can immediately start buying goods, doing sales. But now there is this interim, we use the word interim period. It might take 1 month, it might take 2 months. This interim period where you go into this due diligence checks. So now you have to take into account that any new business that you are doing, any new transactions involving a new supplier, you will have this interim delay. You have this interim delay. So always beware if you have customers say, I want this good urgently. Then they have to get a source for the goods and supply. Always beware that this word urgently should raise some alarm bells. Of course, some areas are exempt. For example, due to COVID, you need masks. So there were a lot of suppliers of masks and all wanted it urgently. That is a separate issue. But if these are normal goods, iPhone or Samsung phone, somebody comes and said, I need 300,000 urgently. So that should raise a question mark. Okay, so I hope I hope I didn't frighten you all. My objective is not to make anyone frightened, but to be aware. Be aware that this new responsibility is tasked onto you by this Amendment Act. So be aware, set up a team, discuss with your finance team, and even the management should get involved, because directors and senior management will ultimately be also responsible for any audits. So discuss it as a team and come up with processes and procedures and set up a file each time you have a new supplier. With that, I think we have opened the floor. Thank you for your time. We open the floor for question and answer. I think there's my email address. If after this session you have some question, feel free to drop me an email, or if you want to discuss, you can give me a call. I'll be more than happy to answer your questions.
Thank you, Mr. Manmohan Singh. A very good presentation, and I hope all the participants have heard Mr. Singh giving a very clear overview of the GST system and also the amendment to the Act. So now it's time for us to raise any questions or clarify some questions. We have already a few questions coming in. So any one of you who would like to raise the question, please post it here on the chat, and we will address the situation and how we can handle with Mr. Singh. So one of the questions that I see is, when a supplier is able to pay GST, however, after a long delay, say about 6 months, due to cash flow problem, what would happen in this situation? Whether the new bill will have impact on this delayed payment by the supplier to GST. So what is your view, Mr. Singh, on this question?
Okay, if I got the question correct, you're saying that the supplier did not deliver the goods, but you did not make payment. Is that correct?
I'm not sure. This is one of the participants, they have raised the issue. So probably for 6 months, they didn't have the cash flow to pay. So they paid up subsequently. I suppose that may be the question. Maybe the gentleman can just post the question. The second one is, I have forgotten claim input tax, which is say 5 months old. Can I claim it now in the current month?
Okay, good question. Technically, you should claim the input tax in the quarter where you incurred. Okay, you receive a tax invoice this quarter, even though you have not paid, you can still make the claim. But however, if you have, maybe you received the invoice late, or maybe you made payment on a pro forma and you received tax invoice subsequently, or probably was in a file and you have forgotten, no issue, you can file it in that quarter. Because it's a loss to you, not to the government. It's a loss to you that you did not get that input claim earlier. So loss of interest, not an issue, you can claim it in the subsequent period when you have that tax invoice on hand.
So can we say that there is another form like Form 7 or something to send the amendment for the claim?
Okay, Dr. Ali, a very good question. Okay, GST has given you an opportunity. That's why it's always good to do a self-review. I have quite a number of clients, before I answer that question, quite a number of clients where IRAS identified for audit. How did IRAS identify? Because in your GST return, you have 4 returns per year. Okay, and income tax, you will do an annual filing. What you must do, if you have not been doing going forward, is that for 2020, your GST filing, assuming your year end is December, if it's May, then you do prorate accordingly. Compare your GST filing, the supplies, standard and zero-rated supplies, with your income tax return, your P&L. Does it match? If your GST is lower or higher, then either your GST filing there's some error or your income tax filing there's some error. Because IRAS does that matching. Many years ago, they had their systems were independent, income tax, GST, but all has been merged and they do regular matching. So once the discrepancy, they will send you a friendly letter. And that friendly letter is the start of an audit. So don't invite the auditor to come, because that might not be an issue, but they might find some other issue with your filing. So that is one way to make sure your filing is correct. And if you identify that your GST was either over-reported or under-reported, then as Dr. Ali said, you can file this F7. F7, you don't have to file for 4 quarters, you can just file for December and rectify whatever errors. And F7 is only required if your output tax payable or input tax claimable is more than 1,500. Let's say you miss out claim $500 input tax, you can do it in your next quarter. Or even your output tax, you underpaid by 1,004. You can pay in the next quarter. But once it hit 1,005, you must file the F7.
So the most important message here is that you should have documentation for whatever claims or whatever you are submitting. So that's what I think all the participants should be aware of.
Okay.
Yeah. We go to the next question. Can we claim GST, which is part of commission, if we have discounted the commission in our sales? Example will be the commission discounted for Grab Food or Food Panda. So this,
if I get this question correctly, when you say claim, that means you are paying the commission, correct? Because you are paying a commission, you will incur GST. So Food Panda or whoever you are paying the commission to must issue you a tax invoice. Must issue a tax invoice showing the GST amount, then you can claim that as your input tax.
And all participants should also note every tax invoice should have the GST registration number on the tax invoice. That is very important. Is that right, Mr. Singh?
Yes, absolutely right.
Okay. Any other questions from the floor participants? We are a trading company, purchase and sale all outside Singapore. So I am assuming there is no GST impact for us. Yeah, I think it's out of scope, right, Mr. Singh?
Yes, it's out of scope. There are two questions I can answer here. One is if you are a trading company, your goods are purchased and sold outside Singapore is out of scope. You do not need to be GST registered. But there are some cases that they have applied to be registered. You can be registered because although it's out of scope, it's still taxable. So the reason why some traders register is so that they can claim input tax on their rental or their expenses which they incur in their office in Singapore. So if you are registered, you can claim the input tax. But when you report your GST return, you will report under the last box called revenue. So your standard rated, zero rated, all be zero, only under revenue and your taxable purchase.
So what are the necessary documents to maintain in order to file GST F7? So as I mentioned earlier, all the documentation in support is very important, right, Mr. Singh?
Okay, a very good question because I just had a case, a client who was doing out of scope supplies. If you are doing out of scope and you're not registered, then no issue. I would recommend don't be GST registered because then your compliance level goes much higher. If you are GST registered and you're doing out of scope, your requirement to maintain documents is still there. Your purchase orders, your bill of lading, your airway bill, proof of payment. Okay, so just briefly share with you, this client of mine, he was in Myanmar. So in Myanmar, when they send goods to Thailand, they don't have this concept of a DO. It's a lot of trust, based on a lot of trust. So he could not show the goods moving from Myanmar to Thailand because there's no airway bill or no bill of lading. So he got into a lot of IRAS audit issues. And his input tax claim of $500,000 was disallowed. So if you are GST registered, your obligation for documentary evidence is still the same.
Can you just briefly explain on the amendment on 20A, overriding the whole clause 19 and 20, Mr. Singh?
Okay, what I meant by that is that 19 and 20, if you satisfy, you're still entitled to an input tax claim. But this 20A came with this new concept, which we have summarized in the presentation, this obligation for you to check whether you knew or should have known. So if IRS can show that you should have known that the supplier is involved in some missing trader fraud, then this section will override 19 and 20 and will disallow the input tax claim. And one point probably I didn't include is that the onerous, it is very onerous, this new section in that, you see, previously, if you have input tax claim, like I was sharing about my client, more than 1 million input tax claim, we can go to the Board of Review to have an independent review whether he's entitled to. But this new section states that, let's say you have input tax claim of 1 million, and IRS say no, we are not going to refund you, and you want to go to Board of Review. The Act says that you must pay 50% of what you are claiming to IRS as a penalty first. So they impose a penalty before you can go to the Board of Review. So effectively, you are tripped. Unless you have the cash, you are cash rich, you can pay, and then let's go to Board of Review. But you cannot pay, then you have to accept IRA's decision. So that's the impact of this amendment.
Okay, one more question here, Mr. Singh. Does sponsorship amount received for an event attract GST?
Okay, good question. Sponsorship, there can be two types of sponsorship. Okay, let's say Siki is doing a walk, a charity walk for, say, a hospice. So there are two ways that funds can be collected. Okay, Siki say, okay, all funds donated will go towards this ABC hospice. Okay, or you might buy some food to supply them, or you just give a check donation. So Siki says, all members please contribute. So you contribute 500, 1,000 sponsorship, no GST. But let's say I want to promote my company GST specialist. So I say, okay, I give you 10,000, but at the finishing line, you must put a poster with GST specialist and maybe put my phone number and email address. So what this means is that I'm giving you 10,000 to Siki, I want something in return. So once you have this two-way process, I give you sponsorship, but I want you to do something for me, then this 10,000 becomes inclusive of GST. Then Siki will have to account the upward tax on that. So as long as it's a genuine one-way donation, no GST.
Okay, we almost covered most of the questions. We'll give another two more questions, 2 or 3 more. If you all have any questions, please just post it now, then we can address it with Mr. Singh. Any more questions, participants? We are almost coming to an end, and I will take in 1 or 2 or 3 questions if there are any burning questions in your mind. For overseas vendor, if the buyer exporter is non-GST registered and imported services beyond the threshold, is the buyer required to be GST registered? Basically, what is the effect to non-registered GST buyer?
Okay, good question. This overseas vendor, the liability is on the supplier. It's on the supplier because they are doing through e-commerce and they are doing business in Singapore. So it will put the local GST traders at a disadvantage because you might be selling the same goods, but the local person has to charge 7%. The overseas person do not charge because it's not GST registered. So this overseas vendor scheme is to make sure that overseas supplier and local supplier supplying the same goods will charge 7%. The buyer, there's no impact on the buyer. Buyer, you are as a consumer. But if you buyer, you are a business and you buy from this overseas vendor who's GST registered and you want to claim, then you must ask for the tax invoice in order to claim the input tax. So in terms of obligation, there's no obligation on the buyer.
Okay, one more question is, if we give cash back to the user because they are participating in our marketing campaign, so will there be any GST impact on the company?
Okay, this cashback issue is not a straightforward issue. So I won't be able to give a direct answer because there are many other factors which need to be taken into account. So apologize that I cannot answer this because I will need the contracts. I need to review the contracts. What are the obligations of both parties and what is covered in the contract? For example, on what basis is the cashback given?
Most importantly, documentation. So
Correct.
There must be some form of written supporting evidence or things like that for the cash back. It's not like just giving back the cash just like that, isn't it?
If I can quickly answer one question which I saw, and it's quite an important question, which states that tax invoice must be in the company name or personal name. It must be in the company's name. If it's addressed, if the staff is authorized to come buy, you must tell the supplier, put it in the company's name. Although you use your credit card, you must insist the company name is shown, because once it's a personal name, you cannot claim.
Yeah. Actually, I had answered that question.
Oh, okay. Yeah.
I've
Thank
written
you.
here. I'm also following the chat, whatever question
Oh, okay,
I
okay,
can
good.
handle, so that we can take many questions as much as possible. But I don't see any more questions coming. So we have reached our timing actually. So in this instance, thank you very much, participants, for joining us today's session. It was really eye-opening GST seminar, GST details for your knowledge. And if you would like to get more information, the Chamber is more than happy to help. And we really hope that you have understood how this GST Amendment Act 2020 affects our SMEs and what can be done about it, right? And what are the opportunities you can take on the GST filings, and how to file correctly without getting caught for fraud transaction and things like that. So I would like to extend a very special thanks to Mr. Manmohan Singh once again for his sharing. And I would like to thank our CEO, Mr. Johnson, as well, and his team for organizing this wonderful session. And it is very important and relevant topic in tackling GST matters and issues. Thank you so much, participants, for taking time out of your busy schedule to join us today and sharing with us on your challenges on GST application in Singapore. And with this, I will end the note and take care and stay safe, everyone. Thank you. Thank you.
Thank you
Mr.
all. Thank you.
Yeah.
Thank you, Mr. Ali and Mr. Manmohan Singh.
Sure, thank you for organizing the session.
We'll catch up, Mr. Manmohan Singh. One of these.
Sure.
Yeah. Have a good weekend.
Sure, same to you. Thank you.
Thank you.